today.
Your stock went up. Did your income?
Price is jumping though.
Everyone watches price. Quiet investors watch cash. A stock price is opinion. A dividend is a contract. Price is noise. Dividends are proof.
Start quick reality check. This video will not make you rich. It's educational only. No advice, no guarantees, just ideas and a couple of doodles.
No get rich quick? Guess I'll stay for the doodles.
Good call.
Hey, something's falling.
First dividend, 42 cents. Doesn't feel big, but it's real. Not opinion, not
Player 1, before we begin your quest for passive income, choose your class.
Whoa, check out that 10% yield. That's my jam.
Yield Chaser. High risk, high regret. Special ability, emotional anchoring. Weakness, math.
Still looks shiny.
Dividend, fortress builder.
Steady gains, actual sleep. Dividends though, they're like a reward, right? Company giving you a pat on the back? Not a pat, a signal. Dividends aren't generous, they're strategic. They tell you where the business is in its life cycle. No dividend, initiation, tiny one, growth, steady raises, maturity, cuts or one-offs, reset. So a special dividend is good? Price is noise, dividends are proof. 10% yield, it's glowing.
Your brain loves that glow.
Mine now. Wait, it's rotten?
Emotional dividend. Looks rich, pays ruin. Field rule. Never trust yield without coverage.
So check the cash flow first.
Exactly.
Price is noise, dividends are proof.
So sectors have personalities?
Scroll 3, know your enemy. Utilities, high yield, slow growth.
boring but pays rent.
Tech, low or no yield. We're reinvesting in innovation. Translation, YOLO. Consumer staples, steady Eddie.
People always need soap, Karen.
REITs must pay 90% plus.
I'm listening. Before spreadsheets, listen.
He says the dividend is sacred.
Hear that tone? A little tremble.
Tone warns first.
Let's see if the cash agrees. Coverage only 0.8.
Math confirms what tone hints. So we pass.
Professionals move on. Income.
Emotional damage zone? Bring it.
Stay low. Watch the decision trees.
Whoa, 12% dividends? OMG, take my money.
This is where 73% of players lose their first save file. That 12% yield exists because the stock price tanked 40%. The company's about to cut the dividend. And you just happen after the warning. Warning? I thought you wait for confirmation.
Psst, the market whispers before it screams.
And how do I know when to sell? Selling is a skill, not a reaction. And the skill is when language changes, document it. Language, companies stop saying growing and start matters. Dividends are proof.
All right, show me.
Enemy number 2, emotional anchoring.
But I've held this stock for 20 years. My dad held it. It's tradition.
Cool story.
Coverage ratio is 0.7 and the CEO just said strategic flexibility in the earnings call.
This spike! If I buy right before the X date, I pocket the dividend, right?
Most investors misunderstand ex-dividend dates.
So dividend captures just free money?
Rarely. Price adjusts. The cash doesn't move until payday. Watch. Declaration, the board promises $1. X-date price drops, you qualify if you held the day before.
I thought yield is yield, not if the taxman bites first. Wait, how can a 4% beat 6? If 4 stays whole and 6 leaks? Show me. Watch the chests. Oh, wrong account, wrong outcome.
Exactly. After tax income is the real return.
So put the dividends.
Episode 8. Building the fortress.
So we just keep adding stocks, right? More safety.
30 to 50. Past that, you're not safer, just scared. Diversification has a breaking point. A good portfolio should feel boring. Boring is how income compounds safely. Concentration before.
This is where we build the fortress? Yep, the good part. Construction rules. Rule 1, the sweet spot, 30 to 50 stocks. Why not 100 for maximum safety? Because you're not a hedge fund, Derek. You can't monitor 100 companies while also having a life. Fortress math, less than 15, one bad egg ruins. Rule number 2, position sizing. Starting weight, 2 to 3% per stock. That's tiny. How's it ever gonna matter? If it works, you let it run to 5%. Then you trim it back to 3. But what if it doubles, triples, 10 bagger? Then you still cut it. You don't let one winner become your whole portfolio. So no YOLO.
Secret endgame content. Keep a bench of pre-researched stocks you almost bought.
Why?
And one will.
He is when one of my 40 stocks inevitably cuts its dividend.
And one will.
I don't panic. Buy garbage. I just promote someone from the bench. Noise.
Dividends are proof?
Now you're getting it.
Age 25 to 40. Accumulation phase. Build the fortress. Reinvest everything.
I don't even look at the dividends. They auto-reinvest.
This is the way. Age 40 to 60. Growth phase.
I take 50% as income, reinvest 50.
Balance. Mature. Boring. Perfect. Age 60 plus. Preservation phase.
The fortress is built. Now you just
Ask me, does everyone get a 401? Honey, that's like asking if every date ends in a diamond ring. I wish. No, federal law doesn't make your boss give you one. About 30% of you are working for companies that hand you a world's best